How to choose which Bitcoin ETF to buy. The funds that started trading recently are all designed to track the price of the largest cryptocurrency, but experts say investors should consider a few factors before picking one. Bitcoin ETFs are finally here in a landmark moment for the crypto industry. Offerings from BlackRock, Invesco, ARK Investment Management LLC, Fidelity Investments and a handful other firms launched. But unlike most ETFs, which differ in terms of the composition of their underlying holdings, all the new spot Bitcoin ETFs aim to track the price of the largest cryptocurrency by holding it. That means deciding which one to purchase can get confusing since the differences between funds are slim. Here's what you should consider. Fees. The easiest way to differentiate between funds is looking at costs. Right now, the most expensive product is the Grayscale Bitcoin Trust, which converted from a closed-end fund into an ETF. That product currently has an expense ratio of 1.5%, or 150 basis points, which is essentially $15 in annual fees for every $1,000 you invest. This compares to just 20 basis points for the Bitwise Bitcoin ETF. But complicating matters is that many issuers, in a bid for more customers, are offering fee waivers for a certain amount of time or until the fund reaches a specific asset threshold. Bitwise Asset Management Inc., WisdomTree Inc. and ARK, for instance, all have zero fees for the first 6 months, up to a certain asset threshold. Meanwhile, BlackRock's iShares Bitcoin Trust has the longest fee waiver at 12 months, during which it will charge 12 basis points for the first $5 billion in assets, and then 25 basis points thereafter. Fee structure, however, is more important for long-term investors than short-term traders. The latter may be willing to pay up for certain technical advantages. If you like this video, be sure to subscribe for more. Hit the like button, and drop any questions in the comments. Your support means a lot, and I look forward to seeing you in the next videos. Thanks for watching. Technicals. How well a fund operates can be just as important as how much it costs. For ETFs, it's all about how well the product tracks the price of an underlying index, or asset in this case. Some active managers behind one fund might be better at that than others. So if the price of an ETF is higher than the value of its holdings, buyers are essentially paying a premium for access. Currently, the new spot ETFs are doing a good job tracking the underlying price of Bitcoin, but it's worth keeping an eye on. Another technical to watch is the fund's liquidity, or how easy it is to convert shares into cash. Typically, the more trading volume a fund has, the more liquid it is. This is especially important for short-term traders, whose bets can be affected by how quickly and efficiently they can get their money into and out of positions. Right now, Grayscale's ETF has the most liquidity. But its high fee means investors have to pay up for it. Branding. Like with any consumer product, brand loyalty can be a deciding factor. Big names like BlackRock, Fidelity and Franklin Templeton Investments might be more familiar for mainstream investors and therefore seem safer. Others may prefer a firm that positions itself as a crypto expert like Bitwise. The bigger firms will likely have an easier time attracting assets, since they have a more extensive network of financial advisors and clients. The size of an ETF usually isn't that important for investors, but it could matter in this case. With so many Bitcoin ETFs on the market, there's a chance that at least a few won't survive. When an ETF closes, investors still get all their money back, but a closure could trigger a taxable event at an inopportune time. Right now, Grayscale's GBTC has the most assets with about $23 billion, while BlackRock's IBIT and Fidelity's FBTC each have about $1 billion. Custodian. One difference among the spot ETFs is their custodian, or the platform where the actual Bitcoin used in the funds is stored. 8 of the new ETFs are using Coinbase Global Inc., while the VanEck Bitcoin Trust is using Gemini, and Fidelity is using its own digital asset unit to safeguard the crypto for its fund. Some argue that having so many funds dependent on Coinbase creates a dangerous concentration of risk. Although the U.S. Securities and Exchange Commission greenlit the funds, The regulator is currently in a separate legal battle with Coinbase after accusing it of running an unregistered exchange for tokens the regulator deemed as securities. To be sure, the custody services offered by Coinbase are under a separate entity from its exchange. But what a potential bankruptcy could mean for spot Bitcoin ETF customers is unclear. If investors want to dive deeper into the ETF due diligence process, evaluating custodians can certainly be on the checklist. But it may come down to perception more than anything.